All right, hello everybody. Let me move my face. That's a good start. There we go. Welcome in. Thank you for joining. What is this? Our last AI circle for October. I think we only have about 3 left for the year with how the holidays line up and all that. But thank you guys for being here today. As always, we'll get Kelly on here in a second, go over the markets and such. I feel like I haven't said this in a while, but get your questions in early if you do have any. I know that some people send them in right at the start, which is beautiful. We'd hate to not get your questions answered and run out of time. I am slightly on a time crunch today. I have a call right after the end of this, but we should be able to get through everything. Not a ton to talk about in the markets. It's going to be probably more of the same that we've spoke about before. But before I get Kelly on here, I'm going to go through the disclaimer and then we'll get him going. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instruments. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip smart folios that you select are suitable for your investment profile before trading in a live brokerage account. Last thing, in case anyone's new, this is our typical agenda. Very straightforward. We'll talk about the markets for a little bit. Sometimes there's a trade that the AI made that we want to focus on, or just kind of, there hasn't been a ton going on, honestly, lately. But say if we went back to, I don't know, April or so, there was a lot going on because the market was a bit different than it is now, I'll just say. And then maybe the portion that you guys are here is for Q&A. Keep them, I would say market driven or iFlip related. This isn't necessarily like a customer support type thing. If there's something I see in the chat that I can answer, I will definitely respond. But just keep all that in mind. So with all that being said, let me get Kelly so he can talk. Kelly, how are you?
I'm well. How are you, Lee?
Good. Not that anyone would know this, but Kelly and I are actually going to be able to see each other next week. We'll both be in Reno at a conference. So luckily, this kind of the AI circle planning was right between where we'd both be gone or we wouldn't be having one.
Well, yeah, that and the fact that we knew about this and that we kind of arranged things so that it would work this way. So we had both going for us, everyone. I guess I'll go and start going, Lee. Here we go. Today, thanks for sharing my screen, everyone. I'm going to actually start off. This is a picture of the S&P 500. Hopefully, that renders well on your screens. We've been doing this for a while, so. But the most important thing when I do push up these charts is keep in mind at Flip we are not chartists, but the AI Circle is a bi-weekly show. Bi-monthly show that we do to educate our clients on updates with our software or things generally going on around the world in the markets, and an expectation from an opinion of my own of what's going to happen in the future. Maybe every now and then some stocks I'm looking at as curiosities that I might put in my portfolio or run machine learning on to see if there's any value in trading them vis-a-vis using science of some kind. But today I think we'll go start like this. As everyone knows, over the last several months, sadly, it's been kind of a nice bit of boring. I mentioned that the market would likely melt up through the end of the year, and that has been the case. The market has been definitely melting up. This is a picture of the S&P 500 going from the lows of the tariff scare in early April. We literally recovered from that, almost a little V bottom. This is like a V, but then we melted higher. And so the melting process actually came away starting essentially in June, and it melted up since that point in time. October, as we all know, September is generally the worst month for the stock market, and October being right behind it. So the fall, as we cusp from the third quarter to the fourth quarter, generally the most volatile times of the stock market. So in September, as you can see here, here's this little bracket of September. Really not much happened. It just melted higher. October, I pointed out in our first AI circle of this month, I think it was in the 5th, I can't remember. But I said I felt that October would still be a good month, even though you can expect a little more volatility because it's October after all. And yes, we had it. We had that one terrible day. Last week, it was on the 10th, and the market melted down almost 900 points in the Dow, 3% in the NASDAQ, etc. But then we recovered, and actually yesterday, we posted a new high, and we closed a fraction of a percent below it. But the reason I'm going to start there is I'm going to go around the world. Here is the DAX, the German stock market. The DAX has been in a complete holding period after the April lows that they had and remains just off of all-time highs. But it hasn't moved anywhere since May. After the recovery, this market hasn't gone up that much. The FTSE, the Great British market, of course, it looks a lot like our charts, right on the highs. We had a rally yesterday for Great Britain that brought us, again, fractionally off all-time highs. The British markets are doing well. Here's the French markets, all-time highs, just hit it. Again, doesn't look quite as good as the U.S. chart or the FTSE, the Great Britain chart, but it's still all-time highs. Here's the Hang Seng. Kind of did the same thing, melted higher, came off its highs recently, but the Hang Seng to me looks like a decent buy in here, and it seems to be marching higher. Here's the Nikkei, the Japanese stock market, and it's, of course, at all-time highs. And as you know, in Japan, they finally elected not two things different, a conservative and a female. The first woman prime minister of Japan was elected yesterday. And she comes into markets that are literally on all-time highs themselves. Sorry, not all-time highs, but very close. I can tell you there was a time, and this chart will not go back there, but I can tell you there was a time when in the early 1990s, that the Nikkei traded at this price. So if my memory serves me right, we are literally approaching all-time highs after literally as many as 35 years in the Japanese stock market. While I'm on this page, I'm going to switch over real quick. We should take a look at gold. And the gold market, of course, has been kind of a darling from this year. So it started in 2025 at 2630. It's now at 4100. Essentially, that's a huge gain of 1500 points, which is more than, it's like a 55-60% rally on the year, which is incredible. Gold, of course, recently we know it because it had a 10% down day yesterday, and it was down, a little bit more today, but it bounced off of a low. And we'll see if this thing is going to recover. I have no idea why the gold market sold off really a full 10% in one day. Maybe there's a reason behind that because of the energy markets. Let's go back to that because I can hustle through these things because sadly, but really it's a good thing. My message remains the same. I feel we're going to melt higher till the end of the year. And that means how much higher? I don't know. Maybe another few percent, 4 or 5%. But that's considerable given that we still have 2 months left. We're going into the holidays. The only terrible and bad backdrop against that is, of course, the government shutdown. But that doesn't seem to keep the market from still printing new highs because, after all, the shutdown is now in its third week. But we should look at this market in a different way. Let's quickly look over at the oil markets. Look at this. All right, so we have peace in the Middle East, a quasi-peace. Hamas seems to have surrendered. Yes, there's going to be some fires afterwards, but they will likely get put out because it's not an Israeli-U.S. effort. We all know there's a lot of other countries, mostly Arab and Muslim countries in the region, that are also behind the ceasefire and the surrender of Hamas. So that likely will continue, and I feel in the next few months these things will be behind us. But the initial movement in the oil market was, of course, down, right? The energy goes down. We have peace in the Middle East. There will not be disruptions as a result of leaders in the Middle East creating wars, making it hard to get energy out. So right now we're in a situation where the market definitely has went down since the peace accord, which is just 2 weeks ago. So here we are. We were trading around $62, $63 a barrel. We went all the way down to the lows here. I saw a 56 handle print. And then, of course, yesterday we had a big day. We recovered from a low, and today we had a large day up. This will transition into some of the widely held inside of our smartfolios. Energy Transfer. Energy Transfer has been one of our best companies generally over the years, but this year it has not been. This year, Energy Transfer has moved from around $19.30 to, call it, $17 a share. That's a $2 loss. So we're looking at least a 10% drop in price from the beginning of the year, and actually maybe about a 12%, 13% drop from its all-time highs, achieved at around $21 a share early in the year. Same thing is kind of true for All Plains American. We came into the year right around, looks like $17.40. We're basically $1 off of that number. So we're about 5% lower in the year. But that doesn't tell the whole story. Early in the year, we also hit $21 a share. And then we've moved all the way from 21 all the way down to 16.5. So that is literally, as you know, a $4.50 drop. That's a big drop on a $21 stock. But remember, as you see, we get paid dividends. And by the way, a dividend is coming, it looks like, on the Halloween of this year. So interesting time to get the dividend. Normally markets go down into dividends, but I don't suspect that'll be the case here. But again, these are the stalwarts. They've been hurt by the movement of oil to the downside as a result of Trump. But keep in mind, we own these stocks for different reasons than just the pipelines on them. Let's move a little bit further and look at the banking stocks. Basically, the banks hit all-time highs and just came off of some of their prices recently. JP Morgan, this is Bank of America, Goldman Sachs, they all look the same. They hit all-time highs, and they're off about only 4 or 5% at the most from those levels. Nothing going on there. Again, ebb and flow of the markets, they will probably melt higher. We'll move over to some of the kind of the darlings that we've heard about and know. CrowdStrike. This is a stock that obviously people have heard of. It's been a good performer for people this year, from $350 to $500 a share. It's in some of your portfolios. These are the things we want to own. I feel that they're going to go higher over time. These are the kind of companies that represent AI and the kind of the broad use of internet and apps, and the activity of tomorrow needs to have a science that protects it, sometimes from itself, as we all saw the AWS going down just yesterday. Here, so CrowdStrike is one. Another one that we've all heard of is Palantir. Palantir, excuse me, is a stock that has gone up, made some highs, but look where it was in the beginning of the year, where basically it was about $68 a share. It's more than doubled in 1 year. So these are the kind of things we like to have. AI, no AI. When a stock goes up 100%, it just goes up 100%. I don't need AI. You just need to own it, right? So these are stocks that we watch. Some other things that we're kind of keep an eye on: cruise lines, kind of had a terrible move down lower early in the year, but they've recovered. They're not doing great on the year. We don't own a lot of them, but I do mention them because I do keep an eye. Pardon me for 1 second. Frog in my throat. Let's go a little bit further. AT&T, what a boring stock. Look what happened today, though. That's why I pointed out. It's a stock that actually kind of has crept up all year. Looked great. Up until, of course, recently, when it went from $30 down to $25.50. Already tried to print earlier today, $24.50. Who knows why? Sometimes they hit some stocks more than others. I think this has something to do with some tax loss harvesting over time. This is such a widely held stock. I'm kind of an owner here. Other stocks that we follow, here's Tesla. Let's take a quick look at that. Um, uh, Governor Walz from Minnesota used to relish, apparently, when Tesla went down early in the year as a result of the tariffs, a friend of Trump. And here's where Tim Walz from Minnesota was being so happy in glee until, of course, he realizes that he's really betting against Elon Musk. Not wise. And since that time, the stock has moved from a high early at the end of last year of right around 450, where we are today. It went all the way down to 250 and rallied back up to its highs. Why? Because Elon Musk is paying attention to his companies. He's not a person ever to bet against. He is a phenomena of our time, and he will be remembered far beyond yours truly upon passing. Let's go to a couple others. Things that I like. I still keep a good eye on companies like Texas Pacific Land. These are stocks that have definitely, they were doing great last year. As you could see, this huge run up from 900 in the last quarter all the way up to north of 1600 and beyond, and then only to have a spectacular fallback and then fall back really for the rest of the year. I feel that this stock here, again, it's a land play, not necessarily a complete oil play. Oil pipelines like those of Energy Transfer or All Plains American in particular have their pipelines going across this land. And as a result, they get the residues. I think you all know that. They get a revenue stream, and oil, of course, is under pressure. But remember, this is land. It has infrastructure. Lots of it has electricity, and there will be water, and there will be data centers. So the play on this stock is not oil. The play on this stock is something more along the lines of the future and what we're going to do in terms of computing now using AI, and in the future, likely quantum computing. I like this stock. It's hard to own. Keep that in mind. It's hard to own. It doesn't pay much of a dividend. It is expensive, $925 a share. But that doesn't really matter. It moves around like any other stock percentage-wise on a daily basis. And I like this stock towards the end of the year. So let's see if we can pop up a rally and hopefully get to around 1,200 or above, and see if we can pop above this 200-day moving average that has started to slope lower. Let's take a look at the Mesabi Trust. This is a really interesting company, something that I've been following for quite some time as well. This is a company that is really got only 3 people in it. It's a mineral company. It just gets paid residues. That's it. That's its job. But it is tradable, and it is essentially at all-time highs. Oh, by the way, back here, notice how this dropped. This dropped early in the year, in January of this year. It went all the way from about the $35 price it is today, all the way down here to $25. Why did it go down $10 a share? Well, that's because they paid a dividend to everybody of $10 a share. This stock, in reality, is at least this much higher. It really is the equivalent of $44 to $45 a share now. It is a very good stock to own. It is based on minerals, then the deployment of that. That's why there's only 3 people. You don't need many people to collect the money and do accounting on that. So that's what this business is, and it pays a nice dividend. Look here, pays 34 cents per quarter. Double that, that's a buck on that. So it's about just under 4%, the same amount of money that you would get in a money market. So I kind of like this kind of stock with that, plus the upside potential. It is not in a lot of portfolios, but it is in a few, like Shield and things like that. Others, I really can't go much further than to go too quickly to Bitcoin, which you always have to look at that. I will look at Bitcoin this particular time through directly by looking at the crypto markets directly. Here is Bitcoin. Well, where do we begin? Bitcoin started the year basically at about $93,000 a share. It had come off 100, hitting $100,000 a share per coin. Sorry, everyone, per coin around Christmas of last year. It fell back a little bit towards in April just because the stock market goes down. But the market has kind of recovered and rallied, made a new high just the other day, and then spectacularly, along with the rest of the market on the 10th of this month, it had a huge down day. And it's basically at the lows of that down day. Where does Bitcoin go? I think everybody knows this is a buying opportunity. That is my opinion, and that is my belief, and I am a large owner of Bitcoin. It is tomorrow. There's nobody needs to preach to us for us to basically understand the truth in it. This market is going higher, and that's all there is to it. It's also more steady. We're not going to see the things we saw in the past where they have these spectacular declines that last for years. It is part of the world now. It is part of this administration, and it is going to be embedded into our society in many other ways in the future. And that means it must, and most likely, especially for something that has a limited supply, it will very obviously go higher. It's so obvious that we have to try to poke holes in that. It is sitting here at $107,000 a coin. I foresee sometime early next year, I'm not going to get too ambitious, that we will again approach new highs of around $130,000 a share. And everybody knows that's about 20% higher than here. So I kind of look at these smaller dips of 10%, 15% as buying opportunities. I don't have to wait for 60 or 70% drawdowns. I think that's part of the past. So that's basically it, Lee. I don't have anything else other than to summarize thusly. Market's melting up. It has been melting up. It will continue to melt up. There is nothing in the future that I can see other than some black swan that would say, hey, markets, we are going into a Santa Claus finale, not a rally. So I don't feel that to be the case. I think Santa will be here, his cheeks will be red, and the markets will be higher.
Perfect. And we just had one question early on, and I'll just clarify. I think Bobby, I think we might have confused you. I hope you're still here. So what the support team said to you was correct. So he's talking about dividends reinvesting. So in smart folios, if you own a stock that pays a dividend, that money's going to stay in the smart folio. Where we might have confused you is when we said if you own a stock manually, say you have, I don't know, Plains All American, like Kelly was looking at, they pay a dividend, that's going to go into your buying power. It won't automatically reinvest and buy more shares of that stock. So I hope that helps. Sorry for the confusion before, but what they said to you is correct. And I thought we said the same, but we might not have. So sorry about that. I'll wait for any other questions to come in. I just have one announcement starting on I'm trying to find the day, sorry. So next Saturday starts November. Our marketing team is going to do the same Black Friday special that we did last year, except this year it's going to be for the whole month of November. So anyone who funds a new account, and we'll get some messaging out on this, I just want to let you guys know first, since you're on the AI circle and this is the first announcement of it. But anyone who funds a new account for $5,000 or more, I don't want to say disclaimer, but the terms, if you will, for you have to keep that money invested for at least 6 months. What you'll get for that is a $250 gift card. So just the key points: it does have to be a new account, and it does need to stay invested on the platform for 6 months. Again, more details to come on that through our marketing team, but I wanted to let you guys know first since you're here.
And I think everybody, here's my math on that. You put 5,000, you're going to get 250. That's 5% over 6 months. I mean, a lot of people, when you have Chase offering you to open up a new account, you put in 100,000 and they'll give you 1,500. It gets your 1.5%. It seems worth it. I think it's definitely worth it if we're giving 250 on $5,000 account. I don't want you to do it, but obviously you should, because it's 5%. I can't make 5% on cash anywhere else.
No.
So just a heads up, folks.
And just maybe I was going to say one more thing. You know, if you don't have a Roth IRA yet or a traditional, if you haven't made your contributions for the year, open up a new IRA with us. Just, you know, obviously you need to put more than $5,000 in there, but if you can max out a Roth or a traditional IRA before the end of the year, you kind of killed two birds with one stone. So sorry to interrupt you, Kelly.
No, it's the interesting thing is we've been doing this AI circle for, how long now, Lee? Maybe a year and a half, 2 years?
On here, yeah. So I just looked on YouTube. Actually, this is our 70th episode. So, and we had some before that. Maybe it's not counting, but go ahead.
Well, my point is that after doing this, from the standpoint of talking to people that are iFlip that have assets on the iFlip platform. Conceptually, what I'm trying to point out, partly about our smartfolios, which there's a few. I've mentioned them last time on. There's some new things coming down the line. We're making all kinds of different kinds of marginal improvements and larger improvements in our software. But my job on the AI Circle is to kind of keep people, abreast of the overall markets, what's going on around the world with interest rates and all else. By the way, we didn't quickly talk about that, but on the interest rate scenario,
I can pull it up if you'd like.
Yeah, pull that up. Let's get a quick look at that, because that is the one other thing that does make a difference in terms of the way the world works. And as you know, this is the 10-year note. As we go higher in price, it means lower interest rates. One thing we knew from the last time we did the AI Circle was the Fed had recently cut the Fed funds rate by 25 basis points. There's very likely going to be another cut. But as you can see, the 10-year note is essentially on its highs. But if you look back and you see where we came into the year, it's been a profound rally, right? We came into the year at 108, and now we're at 113. But now that's, believe it or not, that's a 6% rally. That's a lot for the bond market. And interest rates have come down. We don't want to see interest rates spike higher, in other words, in price, which means interest rates get way lower. That means there's a problem with the economy. But what I see in this kind of trend in interest rates is the following, that interest rates tend to trend for huge periods of time. In other words, tens of years, a decade. And I remember when I came into this industry, interest rates were absolutely on their highs. That was the early 80s when I remember the Fed funds rate was 19%, maybe 21% at one specific point, which means the price would be super high. But this is what we've seen if we go back a number of years. COVID printed the lows in interest rates. Ever since COVID, which was a remarkable event, interest rates actually went up. That's when you see these prices going down, that means interest rates are going up. Why? Because we had inflation. The inflation actually is being managed by the new administration. It takes time. It could take years. It may not even be managed, and very likely will not be managed completely in the Trump administration. But all he has to do is start the running. You start with a jog and you advance to a run. What I see down here looks to me a little bit like a strange triple bottom. Bottom, bottom, and a bottom. If we look at this on a different basis, if we were to look at this weekly, because this is very important, so let's try to see if I can get it. A weekly chart. Blow it out a little bit and see if we can see it. I drew this line. What we have here is from literally the lows of interest rate, all-time lows. This is when interest rates were at 2.5% on the mortgages. We moved all the way up literally to almost 7% on the 10-year note. But if you notice from that low, which was about a year ago, we've done nothing but kind of crawl higher, and we've done it slowly. And if we can push above this, again, downward sloping 200-day moving average and hold, interest rates actually have a chance of going back down to below 4%. That's a huge, I mean, on a mortgage. And that means on the Fed funds that they have a chance possibly to go back down from where we are now, maybe another percent. In other words, down to 2.75 on the Fed funds rate. If that occurs, we should see another expanded move and boom in the stock market and the housing market. So the other big thing for people to understand is the housing market is a direct function in many ways of the stock market. And if the stock market if the stock market is performing, housing prices generally go up. That's not a good thing. But if interest rates go down simultaneously, that is a good thing. It helps new home buyers, et cetera. It will help create another huge leg, I think, in the stock market. And if that's the case, again, we just want to be invested. So I think 2026 is going to be extremely interesting for all of us. And I think it'll be actually exciting. So let's see what happens.
Awesome. I'm not seeing any other questions that have came in, so I think we're going to wrap it up. Yeah, short and sweet. Not necessarily mad that there's nothing exciting to talk about.
There isn't. I wish there was. I wish it's just become so mundane over the last 3 months. And I hope everybody can see, when you see the charts like this, what are we looking to say? You know, this company or that. We'll find out.
Yep.
Till the next time.
Till the next time is right. And speaking of next times, let me see if I can get this up. It's going to cover our faces, but that's all right. So we'll be off next week, obviously, and then back in 2 weeks. So November 5th, 5:30 as normal. The next one following that will be 2 weeks after. And then I don't think I said it to you guys. I think I said it to Kelly before we started, but probably only one AI circle in December, just for how the holidays line up and travel schedules and all that. So 3 more AI circles for the rest of the year. And as always, you guys know how to get in contact with us if you need any help with anything. So with all that being said, thank you guys for being here. Have a good rest of your afternoons, and we'll see you back in 2 weeks.
All the best, everyone. Happy holidays. We're coming into them.